We are live. Russian invasion of Ukraine, much worse than expected. Russia is yet to respond to NATO sanctions nor start negotiations with Ukraine. Look at some headlines coming in the latest hours. The big risk to the global economy is Russia could cut natural gas, oil, and palladium to Europe and cause a massive inflation spike. Also, wheat crops in Ukraine, plus rising energy costs are a nuclear bomb for global financial markets already facing worldwide record inflation. So first it crashes the bond market, then rising interest rates crashes stock markets. Prepare for potentially energy and agricultural price shocks. Prepare for extreme volatility in stock and bond markets, including cryptocurrencies, if this threat is forced. Also, there's new threats that we are seeing develop of cyber warfare that could go global. NVIDIA just got hit. US is threatening to go after Russia and shut down all of their networks. And we've seen Russia attacking Ukraine. Again, and also we've had notable globalist world leaders threatening that a global cyber attack is the next big threat, far worse than what we just faced. Now, I still think most likely a de-escalation is in the cards soon. And if so, energy costs could sell off rapidly, causing bond yields to fall. And falling bond yields are most likely to moonshot our favorite asset, cryptocurrencies, and of course, the NASDAQ. There's also a new credit expansion starting from China. And this is during what's supposed to be another rate cycle in the US. And I do think we will indeed have a rate hiking cycle because inflation is just very, very strong. They have to cool it off. This may make emerging markets the best performing stock index of 2022, and I'd say in a 5 to 10 year cycle. The last time the US tightened while China expanded credit, I want you to remember Bitcoin went up 4,400%. So let's get excited and have a highly diversified portfolio that covers all the angles. Here's our current trade alert recommendation for every $10,000 you're putting into the market. Step one, load up on crash insurance. Okay, we've had signs of a little de-escalation. The markets yesterday loved that Biden had nothing useful to stop Russia. They've been telling us Russia was going to attack for the last 2 weeks and did absolutely nothing about it. And then they put a bunch of sanctions on that are seemingly meaningless. But Russia's yet to respond. There's no negotiations in the works yet. And Russia's having a harder time than expected to take over Ukraine. They've been losing a lot of soldiers. So I think this conflict could still erupt, and it makes sense to have a super high level of downside protection against a stock market crash. So we haven't changed our position. We still hold 87 UVXY shares. This is our crash insurance in the 2020 Black Swan event when global economies locked down, sending oil negative, creating margin calls and all sorts of chaos globally. This product went up 1,100%. And so it allows you to stay long your big positions that you believe in long term and hold through drawdowns without a lot of loss. Because if there are panics, there's limit down days, there's shock and awe, then this puppy really rips higher. And it's really in that last week of the 4-week run up in UVXY that it really shined. It went from a 500% return to an 1,100% return in just a few trading days. Step two, big picture, I believe we're on the brink of inflation falling, not rising. It's going to be sticky, but I believe it's going to slow down. The stimulus has been gone for over a year, and the most likely impact I see as the de-escalation occurs is energy costs fall, the global economy falls, bond yields stop rising. You want to be long growth tech. Our favorite technology is Ethereum by far. It is a massive, massive project that's less than 10 years old and has huge growth ahead. Far more than betting on Amazon or Google or the giants that have already been around for several decades. So we're picking up 218 shares of ETHE, the Grayscale Trust Ethereum. And it's essentially ripping off the entire banking system, insurance system, stock brokerage system into a decentralized, brand new world of money. It's beautiful, it's growing, it's working. It's not just a pipe dream anymore. It's quite literally here and does not look like it's going anywhere. And all the big hedge funds, all the big banks, everybody's jumping on board because they can't stop it. And here's a look at Ethereum over from 2018 to current, driving up its valuation by 18,000%. It's down big time from its recent high. And I do think the cycle we're heading into is going to be absolutely beautiful for this asset. Now, Grayscale Trust, ETHE, lets you get this asset safely from your stock brokerage account. And it's trading at about a 30% discount from the Ethereum they own. So it's a beautiful time to load up and load up big on Ethereum. So that's our favorite growth stock and where I think you can make the most money as soon as the de-escalation occurs. But I got to be clear, it is very murky waters here. There's no sign of this de-escalating in the very short term. And if things do get worse, expect Russia to pull energy and make the price go up. And so BOIL is the US natural gas. If Russia starts to cut off supplies to Europe, we're going to have to rush our natural gas out there. It's going to make BOIL go skyrocketing. Now, this is pretty amazing. It hasn't gone skyrocketing yet because you're seeing capitalism at work during a war. All of Europe doesn't give a rat's ass about Ukraine because they know it would make their energy costs skyrocket. So they're not doing anything meaningful to stop Russia yet. Okay, so we just a few months ago, we had BOIL go to 90, and today it's only at 37. So this could double, triple, quadruple from here if things escalate. So UVXY and BOIL could simultaneously skyrocket if this conflict does get worse. Now, at this point, my best guess is Ukraine surrenders by the end of next week. It looks like a hopeless battle. But I got to say, they are tightening up, they're defending their cities, and they've killed approximately 1,600 Russians. And this is definitely going a little bit slower than Russia anticipated. So we're going to just have to see how this plays out. And again, this is very, very early days in this war breaking out. If we look at the asset allocation, we currently have a 15% stock crash hedge. Now remember, in the 2020 March crash, 10% did the trick to dramatically reduce drawdown. Early in the crash, you certainly had some losses, but in the worst parts of it, you would have actually been up because of that 1,100% return on a 10% position. So we're more than hedged to survive any type of stock market crash. We have nothing to worry about on that front. I do want to cut that down to 7 the second we see a real terms of peace. And I do believe Ukraine will come to agreement with Russia as they have no choice, but we will see. So until that occurs, we're going to keep heavily hedged. Okay, then our big play for the next decade is Ethereum is going to outperform every growth asset by far. ETHE is your exposure to that. We've had energy and food costs and used car prices and bonds and everything you could possibly imagine go wrong for growth assets over the last 3 months, just like we did last year. And then that all reversed for the remainder of the year. So de-escalation's probably going to moonshot tech stocks and especially Ethereum. So I do see ETHE breaking into new highs this year. Now, our only main threat is inflation keeps running too hot and hurts the bond market, which again crushes growth stocks. So our hedge against inflation remains natural gas at this point with BOIL. So the breakdown is on every $10,000 invested, we're 15% hedged against a stock crash. We've got our biggest bet on the long-term asset Ethereum, and then we're guarding that aggressively with natural gas. So again, our catalyst here will be Ukraine surrenders, agrees to no NATO and to get all of the weapons out of Ukraine. And that should do the trick to completely de-escalate this situation. So the minute that happens, expect us to sell oil completely, cut UVXY in half, and then we'll look at a new energy hedge, which could potentially, I do want to see oil fall. I think the second this happens, we can see oil fall below 80 and then get back into NRGU. And also we're considering RSX, which is a good proxy to oil and trading at an extreme discount. But Putin continues to surprise us. We may just stay away from that because he might just keep on trying to take over more territories. It's completely unpredictable right now. And this is the strategy for our high risk growth portfolio that returned 233% in 2021, turning every $10,000 into $33,000. Are you ready to triple your money this year? Let's take a look at the big picture macro view that we have here at Portfolio Builder. The global economy is slowing down, and I believe inflation will peak out by March. That's when oil went negative 2 years ago. So this makes all the numbers really stacked in our favor to fall between March and April. Now, the big question is, how fast will it fall for the remainder of the year? If it falls fast, and we get back to that 2 to 3% inflation range, we could be in a Goldilocks situation and a very, very strong stock and cryptocurrency market. That inflation continues to surprise to the upside. Bond markets will have big problems and take everything else down with it. So this is going to be the most important data to watch. Good news is just about every data point we have is showing a dramatic slowdown. Used cars are falling. Inventories levels are rising. Housing sales are slowing down and falling. Cost to shipping goods is falling. The only thing that's stuck, very elevated, primarily are energy costs and raw materials. So that, and food. So that all needs to start to slow down quite quickly here. Otherwise, we're going to have to get very aggressive with slowing the economy by force through the Federal Reserve. Now, in general, I believe the bond market crash is done, which is what's been holding back stocks, especially growth assets. If Russia tensions ease, energy costs will fall rapidly and inflation cools off, and your Ethereum is going to go skyrocketing. That's my base case currently. Falling bond yields will propel Ethereum to new highs in 2022. And so when we look at our options as an investor, we're still running massive deficits globally. There's not a single country running a account surplus except for Russia. Bonds are still ugly. CPI's at 7.5. 30 years paying you 2.2%. That does not make sense. Now, as that converges, bonds will become attractive. So I still think we're going to slowly but surely see pain in bond over the next 24 months. And it's going to take about 24 months for the inflation to completely cool off. So these are the main things to focus on over the next 2 years. The CPI needs to start falling rapidly for bonds. Okay, so it can slow down into March. It must start to fall by April. If not, we're going to have some big problems in the bond market and thus equity markets. So for now, investors have no other logical option. That's why we keep seeing this crazy volatility in stocks. Everybody knows World War III would be bad for stocks. They pull their money out, but then they have nowhere to store it. So they go right back. And that's why we keep seeing this big moves up and down in stocks, cryptocurrencies, and commodities just stubbornly staying at these extremely high prices. And again, that's most likely to continue until there's a better alternative. Central banks globally have made bonds unattractive. So it's forcing investors to melt up the only other assets, stocks, cryptocurrencies, and commodities. But the second those bonds become attractive, we're going to be moving big portion of our portfolio, potentially 50%, to the safe haven asset. It makes my job really easy when bonds are priced properly because it completely smooths out the volatility curve. Much easier to stomach bonds than it is the VIX. So it's critical that you watch our webinar every Monday, Wednesday, Friday, and be ready for the sell alert. Now, spoiler alert, if you're not a paid member, you're not going to get the exit. You just get the entry. So you must call Dean and upgrade your free trial at 505-322-7515. And And keep in mind, once you upgrade, you gain access to the membership area. So you can punch in any amount of money and it'll output exactly how many shares of each asset to buy. And plus we have two strategies. The safe growth, which we recommend putting 70% of your money into. It's a global stock portfolio that gives you exposure to US, to Asia, to Europe, to rare earth metals, to uranium, all sorts of inflationary hedges. It's a less volatile, bigger market cap exposure to put 70% of your money. And then only 30% should be in our high risk strategy. So if that high risk is doubling or tripling, pull off profits and funnel it into the safer long-term strategy. Okay, I want to jump right into the news now because there's quite a bit to follow here. Okay, so we're going to check out the headlines. I'm going to do a quick shout out to the live crowd before we hit the news feed. We've got 91 live calling in. We have 2412, Armin, Barry, Bill in Denver, Bob, Brandon, Bruce, Chuck, Clint, Dan, Dennis, Doc, Don, Dorian, Dustin, Dwight, EC, Eddie, Aline, Irvin, Gary. We got Gary Feldman, Gary Mitchell, Gary Barber, George, Jermaine, Jones, Jordan, Greg, Guru, Harry, James, Jeff, Jenny, John Deere, Johnny Thomas, John, Juan, Kathy, Kendrick, Kevin, Karen, Kurt, Orlando, Lily, Luzum, Marisa, Michael Harrington, Mike C, Mike Vakili, MJ, Morris, Murray, Mustafa, My Downtown 30, Nicole, Nilly, Pat, PC, Peter, Remesis, RD Martindale, Rick, Robert, Rock, Rod, Ron, Sass, Scott, Sean, Tom Sharp, Cheyenne, Sarama, Stan, Steve, Stephen, Taji, Terry, Tim, user, Victor, Wayne, Wendy, William, and Zoom. So it's a big crowd and welcome everybody. I'm gonna check out the chats. George says, how can you get a loan from Ethereum? You go to Aave. That's what our private equity does to get leverage for our private equity investors. John says, is ETHE, well, so ETHE is going to be better on the upside, worse on the downside. So it's almost like a leverage product now, the way it behaves. Taiji is asking if we should sell oil. No, not until the Ukraine conflict is resolved, because that is the main threat. Gary says, isn't RSX the Russian market? Yeah, so if Russia stops all this craziness, we would suspect sanctions go away. We'll look at RSX and oil. But yeah, that's why we're not going to touch it right now. Best right now is to just chill. Sean says, if you think de-escalation is coming, well, it's not the threat is not over by any stretch yet, Sean. So mainly, I did not think Putin was going to freaking take over all of Ukraine and blow up the capital. No one thought that was going to happen. So yeah, we need to just be smart here and not be daredevils. Okay, Germany's foreign minister Baerbock says Putin's offer to talks in Minsk was poisoned offer. And EU ministers did not even discuss it. That's because they wanted the Ukrainians to drop their weapons to go into talks so they can all get massacred. Not going to happen. So I don't see a clear concession from Ukraine at all yet. Bitcoin news, world's largest custodian bank, BNY Mellon, to allow institutional clients to hold Bitcoin and Ether. The Atlanticists are learning how few friends they actually have. EU isn't enthusiastic about sanctions, although Germany said we could maybe do SWIFT, but that's a big joke because they need the energy. China supported, yeah, the only way we stop Russia if they want to keep being aggressive is a whole lot of pain globally in financial markets. So China is supportive, Russia, India is supportive, Brazil doesn't care. Shift in the global order. Yeah, we're seeing a big shift in the global order right now. Will Clemente says 76% of Bitcoin supply hasn't moved in 6 months, a new record. So big money is continuing to buy the dip in crypto. Atlanta Fed slashes Q1 GDP tracker to 0.6 from 1.3. Just another data point showing that the global economy is definitely slowing down. Rick says, do you guys do options? No, we're using leverage products that use options, Rick. So we are, but we're not. Yeah, our portfolio is very aggressive, but it's highly diversified with value and growth. Yeah, it's got all your bases covered. You do not need options with this program. Putin's initial aggression was just a small foretaste of what this thug had planned for Ukraine. America's response will be measured carefully by our friends, by our adversaries, and by history itself. We cannot afford to fail this test. Well, we're failing it so far. Ukraine claims 1,400 Russians killed in action since yesterday. More troops are moving in. Robin Brooks basically saying Europe's going to have to continue QE. We did see a pullback in European stocks. Re-upping this tweet, Eurozone GDP is going to be taking a big hit. There will need to be lots of debt financing, but Italy has no fiscal space to get that done. So there will be need for more quantitative easing from the ECB. Massive policy divergence from the Fed. So they're expecting the euro to fall against the dollar on this news. Biden orders 7,000 troops to Germany. Producer prices in Germany and Spain are off the charts. 25% in Germany, 35% in Spain. And it's no wonder they don't want to mess around with Putin. He's picked the perfect time to make this move. We've had NVIDIA cyber attack today. Gary says, what do you see happening if China moves on Taiwan? I don't, well, first of all, Taiwan is much more rich than, let's just put this, I don't think China's going to move on Taiwan. If they did, I believe we would have a financial crisis. But yeah, I don't think that's going to happen right now. They're freezing a bunch of stuff that just doesn't make a difference. Okay, now here's something useful. British Prime Minister Boris Johnson sanctions Putin and Lavrov personally and urges total SWIFT bank transfer sanctions on Russia. That's really it. This is the move that would actually hurt Russia that we're too scared to do. Ban their energy or cut them out of the SWIFT bank. And that's just not happening right now. So the attacks continue. We're looking at a discount of 25% on Ethereum. Nicole says financial crisis for Taiwan, the US, or the world. It would be a world war if China invades Taiwan. And it would be a global stock market crash. Absolutely, but it's not going to happen. They're not strong enough to do that right now. Scott says, yeah, follow the trading plan, Scott, and you're going to do much better. The UVXY and Boyle is there to protect ETHE. It's not there for any other reason. We want to make the big money on Ethereum, and we want to protect against its risks. And there's really two risks. There's just a general collapse in liquidity, which is where UVXY goes up, or there's too high of energy costs, which makes the bond market crash. So you go long commodities. So if you follow the trading plan, you're going to smoothen out your returns and you're going to do much, much better. So our high risk strategy is actually up on the year while most people have just gotten hammered just being long one asset. So yeah, you want to have your bases covered. Scott, I'm going to tell Dean to call you and get you a custom trade alert. Post your email and phone number in there so we can tell him to get a hold of you. But yeah, you really want to upgrade, get into the membership area, and then punch out your value, and it tells you what to buy and sell. So you just tell it how much money you have total based on your huge positions in those two stocks, and you're going to have to sell some to cover your bases with the. Okay, I told Dean to try to get a hold of you, Scott. Okay. But yeah, you need to get in the membership area, punch in your money. It tells you what to buy and sell. EC says, what would you use to buy ETHE? TD Ameritrade, Robinhood. any stock brokerage account. It's a massive trust called Grayscale Trust. And the second this de-escalates, we will reduce our hedging, but right now is certainly a problem. Tom Sharp says China does not have the water mobility to move an army to Taiwan. Yeah, well, the main thing is we see Russia has access to food and energy, and everybody needs it. China can't feed itself, and it doesn't have any energy, so it'd be very, very easy to starve China to death. Now, of course, they make all of our products for the whole world, so they can also hurt everyone else. So it would be horrible if that happened. Yeah, guys, we're in the middle of potentially World War III. We want to own boil until this de-escalates. There's nothing that's de-escalated yet. So yes, hold your boil. It's going to be very volatile. Just 4 hours ago, Russian President Vladimir Putin calls on the Ukrainian military to overthrow authorities in Kiev. Hearing Ukraine is inflicting more damage on the Russian army than Putin expected. If Putin doesn't run an absolutely flawless campaign, he will be deposed. She is watching. She would have to run a flawless campaign in Taiwan. Smallest flaw with Taiwan would be the end of Xi. Russia has prepared sanctions to hit West's weak points. Here's our letter of what to ban. It says you can ban anything except anything related to energy, meaning the extraction, production, refinement, liquefaction, gasification, enrichment, fabrication of petroleum, crude oil, condensates, oils, natural gas, petroleum, natural gas, coal, agriculture, so they're just not cutting uranium in any form. So yeah, you can't, they're not doing anything to Russia at all. That's the bottom line. So is Russia going to keep this up until something does hurt them? That's the main threat ahead. Russia's foreign ministry says threats of sanctions from London will not deter Russia, but will only lead to a new escalation. So they're threatening to respond to this. Mark Rubio, alarming development today as Russia is enforcing illegitimate maritime claims in the Black Sea by attacking foreign commercial ships. This is about denying Ukraine's resupplies, but it creates a potential for dangerous escalation if NATO is forced to send naval escorts. Huge U-turn since just yesterday. German finance minister says we're open to cutting Russia off SWIFT. That would be the big move that would escalate and probably cause oil to skyrocket, because they wouldn't even be able to sell their goods. It would effectively cut off their economy completely. China says you can't sell us energy in the dollar, but we'll take it in the yuan. So again, de-dollarization. Ukraine TV is giving out instructions on how to prepare Molotov cocktails. And yeah, it doesn't look like they're just gonna give up here. Here's this new army of Putin's moving in. Scary times. Yeah, this conflict's not over, not by a long stretch. US personal savings rates falling. Okay, that's deflationary. Bond yields should fall. This inflationary pressure should slow down. Biden administration presented China with intelligence on Russia's troop buildup in hopes Xi would step in. Chinese officials rebuffed the US and apparently shared the information with Moscow. Ukraine claims it killed 3,000 Russian soldiers in the first 36 hours of the invasion. As ever, you have to take these with a grain of salt, but anything even remotely close to that number would be stunning. The US lost 4,000 in 2 decades in Iraq. Cole says, hasn't Russia been fending off Ukraine been fending off Russia for over 10 years? They've been having a skirmish in, I think, Donetsk and one other city that's killed 14,000 people over the last decade. This is much, much, much more serious, obviously. Gary says, thank you for a $100,000 gain last year using ETHE with TD Ameritrade. Way to go, Gary. Let's see, Russia invasion of Ukraine advancing along same three main lines of attack. U.S. officials slower than Russia anticipated. Live monitor says it's slower because they're getting butchered worse than thought in the main cities, likely because the West sent in special forces to advise the Ukrainians weeks ago. Russian troops took heavy losses in Mariupol as they took control of the city, which they lost 2 hours later to Ukrainians. So yeah, Putin doesn't win soon. He might get much more aggressive. Food prices are at all-time highs, soaring higher. This is very problematic for inflation and for governments. Now, some people are saying, would this make central banks less aggressive with rate hikes? And I would say no, because it's making inflation worse. A de-escalation could actually help the central banks be less aggressive, at least in the US. Putin articulated his ultimatums for Kiev, recognize Crimea as Russian, rejection of NATO accession, no weapon supplies from the West, LNR and DNR gained territory that the regions had pre-2014, suggesting he wants to keep Donetsk and I don't know, I forgot what LNR is. Ben Hunt says Canada thinks kicking its own citizens off the financial system is fair and just for supporting an annoying political protest. The US and Europe think kicking Russian banks off the financial system is too harsh for supporting an invasion of Ukraine. Meanwhile, during an energy crisis, Germany's shutting down 3 nuclear power plants. It's just mind-blowing. Here's a look at the dependency on natural gas. And so you can see, especially these countries, highly dependent, with Germany being the most important at 40%. Russian-Israeli diplomat says the current operation in Ukraine may be only the first stage of Russia's military technical response to the West. Next steps could be deployments to Serbia, Nicaragua, Venezuela, and Cuba. Meanwhile, China pumps money, boosts liquidity support as Ukraine conflict roils markets. See that massive print of 240 billion yuan in a day. Russia says our goal is to protect ourselves from the dangerous organization called NATO, and we won't tolerate it anymore. So yeah, we got to really question what his short-term, medium-term, and long-term goals are before we start de-hedging ourselves. Steven says, with all this turmoil, why are stocks up so much? Because Biden didn't do the big move, swift. So at this point, the expectation is Ukraine surrenders to Russia, and then Russia cools off. That's what the markets are believing right now, and that the inflation is going to come down. But if that doesn't happen, things are going to get very difficult quickly. Rudy, haven't seen somewhat of a comic on Twitter, but not always joking. Might massive cyber attacks on Russia lead to a global escalation of cyber attacks, perhaps taking down our financial system and requiring some sort of, oh, I don't know, what's a good term, a good reset? No, a great reset. And so this Klaus Schwab fellow has been warning that the The lockdown, COVID is nothing compared to the threat of a big cyber attack that's going to come next. So these maniacs, these rich maniacs out there, love all this chaos. Okay, so I think we get the point. The conflict is not over. It's too hard to predict. We're heavily hedged against it escalating, and we'll carefully monitor the situation to reduce our risk. Second, it looks like this fight's over and Putin's going to stop expanding. We want to sell Boyle, cut UVXY in half, and increase ETHE for the high risk strategy. I'll cover the safe growth strategy. Same idea. We want to go big on the triple Q and GBTC for the safer strategy. Okay, meanwhile, the 2-year bond keeps going up. This is what's estimating or perhaps demanding what the Federal Reserve does with rate hikes. In general, we want the 2-year to stop going up, and we want the 30-year to slowly go up. And that's going to tell us we have a healthy bond market with good expectations into the future. But what you can see now is these two are getting very close to one another. That's very, very bad. That's called a flattening of the yield curve. So we'll take a look at that in a future. The chances of a 50 basis point rate hike have fallen. And so that's down to 25%. At this point, I don't think the Federal Reserve is going to do a 50 basis point rate hike. This is March 15th through the 18th when that occurs, that period for the FOMC. And so I think if we get a 25 basis point rate hike, the market's going to love it. And that'll be a good catalyst for markets, assuming, again, things are starting to simmer down with the Russians. Okay, the buffering for QE, the reverse repo is still at 1.6 trillion. So there's still shortage of bonds out there. Here's a look at Boyle and NRGU. So I'm just going to hide NRGU since we're not in it right now. So here's where it did a really big spike, came back down. We got a big, massive run up right here. It came right back down. And so, yeah, we just need to be patient here. Now, in general, natural gas does extremely well during rate hike cycles in the US as China expands credit. And so does oil. So we want to go back, but I do think this is overdone. I'd like to buy into energy aggressively once it's retraced significantly for probably about a month to 2 months. We'll look at that oil chart in a little bit. Here are lumber futures against oil. Lumber futures has been a pretty good predictor of direction about a month or two in advance. Last May it crashed and oil followed a few months later. Then it began rising and oil rose with it. And today they're both very elevated, but they're flatlining and stalling out. And interest rates on mortgages are rising rapidly. So I think we're really on the brink of a explosion higher in cryptocurrencies. We just need energy costs to fall. That's really the only thing holding it back. Gold's been outperforming copper. This predicts yields go lower. Baltic Dry Index, the cost to ship commodities fell from November through February, starting to rise a little bit, but showing more deflation coming in. Here's a look at value in green, or energy, growth, or the tech companies, the NASDAQ in black, and then interest rates. And interesting to see the interest rates, the growth, and the value all go up in this last couple days. And perhaps that's just because growth stocks were so oversold and at a very critical level. Okay, here is Russia against oil. And so you can see the setup here. The discrepancy. Let's go to this. So if we zoom out, so they lost correlation right around here. So we've got a 13 plus 47, you got about a 60% spread on where RSX should be valued. So again, I need to believe thoroughly Putin's done with all his expansion to put you into that play. And I'd like to see the price of oil fall, but this could be pretty cheap regardless. And so we're just going to carefully monitor that one. Wouldn't dare put money in there yet, not in size at least. Okay, in this chart, we're looking at the NASDAQ against emerging markets. NASDAQ's down 13, emerging markets down 7. In the safe growth strategy, where we recommend putting most of your money, we made a move timely to dramatically reduce the NASDAQ near the very high and go big on emerging markets. And that's helped reduce our drawdown relative to the NASDAQ. And again, I like this setup long term for emerging markets to outperform. In the very short term, I do think the NASDAQ and Ethereum could outperform emerging markets due to yields falling, which is the main thing that drives those higher. Okay, Russell 2000 had fallen to a new level, but stabilizing, so no crash over there to freak out about. European stocks took a dump, but jumping back up. And again, now they're going to probably do more QE, so this could be good for their stock market. Dollar just hanging in there. We're going to make some significant changes to our portfolio when it hits 90. Jeffrey Gundlach, who's one of the biggest money managers in the world, believes this can go much, much lower over the decade, into the 80s or 70s. So that would just take cryptocurrencies to extreme valuations. I think we will bounce at 90 and need to do a major change to strategy at that point. Let me zoom out a bit so we can see a little more perspective on the dollar index. So to get back in the 72 to 80 range, and this is where emerging markets kicked ass, right in here, exactly right here. So that's the kind of move where you could outperform emerging markets, outperform US stocks, something like 3-to-1 in that period, if not better. So I'm expecting us to fall to 90, have a bounce, and then maybe start a much lower move. So that's when we should make some pretty significant changes. We want to buy treasuries, the dollar, and the VIX, and get out of commodities and cryptocurrencies and stocks at that time. So at that point, I believe CPI will be much lower, interest rates will be much higher, and we'll see nose-bleeding prices on oil and cryptocurrencies. So it'll be a good time to make a major switch in our portfolio. Probably 12 to 24 months out before we could realistically see that happen. Okay, Chinese currency remaining ultra strong. Here's some pain in the NASDAQ as yellow shows interest rates rising. We see Tesla getting beat up 25%, NVIDIA 23%, Apple killing it up 4%. During a similar period, we got Berkshire Hathaway up 11%. The banks took a little bit of a nosedive, but they're bidding up today, with JP Morgan and Bank of America being the two banks we're tracking. Also part of JP Morgan, funny enough. Okay, in this chart, we're hoping to see, because we're betting big on emerging markets, we're looking to see Alibaba and Tencent start to outperform Taiwan Semiconductors. And we've had brief moments of that, but not yet. And we had this crazy crash from the 23rd to the 24th, but it's been back up. Yeah, that was a very big move on emerging markets. Went to 45, I think, on EEM. And bouncing back up. Critical level for EM is something like 48. It's made it back up to 47.35. Now with the Europe problems, we did see Toyota falling, but it's had a beautiful chart. This is our best gauge of Europe, albeit Japan. And again, looking very strong. Nothing to freak out there. Now, funny, with oil rising, we actually had Exxon falling, expecting that these prices were either unsustainable or would crash the economy. And now we've had oil pull back a tiny bit, and Exxon continues its ascent. Here is a prediction of recessions 16 months out. When the yield curve inverts, then steepens, you end up with a stock crash like clockwork. So during the inversion period, you want to be long growth stocks, basically. And that seems to be where we're headed. You can see that's the trend right here. Let's go to a 1-year chart. So the spread, how much money you get paid to lend the government money from the 10-year bond compared to the 2-year is almost the same now. And that's bad news, bears. But it's not necessarily when the stock crash begins. Again, it typically is about 16 months out. It's when the long end of the bond market starts rising that you get the crash eventually. So that's just not happening right now. Here's a look at these critical bond markets. If you want to know why stocks are going up, I would tell you it's because all of these are going up. The funding. So we've got junk bonds and investment grade bonds have been crashing hard, and now they're rising. So look at this crash in these all 3 bond markets. This was devastating for stocks, and now they are getting a bid. So this is probably the 3 charts you really want to track here on out. We're comparing Tesla to Ethereum. These are the best 2 growth stocks return-wise. And depending on what range we go to, you can see they've had different outperformances, but they're still very correlated. So we're just looking at any divergences to give us any kind of indication of future price action. So far, they're trading very lock in step recently. Gold and silver getting a nice bid. So we got inflation, but we're getting stagflation. So we're seeing the economy slow down, but the inflation is sticking around. Will that last? Big unknown at this point. Currently, we're not in gold and silver. These are our 3 products. As soon as the dollar crashes, we're not there yet. Again, it'd be TMF for triple leveraged long end treasuries, EUO to bet on the dollar against the euro, which may not be a horrible play with Europe having to do QE, China doing QE, and the US essentially tightening. And then we've got UVXY, which had a huge spike, came back down. The coast is not clear, so we're just sitting tight. We're seeing a nice bid on copper, rare earth metals, and uranium. We're currently in rare earth metals and uranium as a better performer than copper miners. If I zoom out a bit, you can see just how dramatic REMX has outperformed. And that's your lithium supply for tech. But copper's done just fine. So you can see how correlated all 3 of these are. But really, we've been seeing some extreme positioning into lithium with REMX and uranium with URA in the last year. And I expect that to continue because it's the only way we can create enough energy for this planet Earth without pissing off all the climate change folks. Okay, here we have the gold to copper ratio. It's been in an uptrend, but it's been flattening, and recently we've had gold outperforming. Here's our yield curve, ugly as hell. So it's about to invert on the 7 and 10 year. It's already inverted on the 20 and 30. The one everybody cares about is the 2 and 10. So if the 2-year goes above the 10-year, a very ominous sign. I'll show you the shape they want it to look like. So before they started printing $3 trillion, $1 trillion from Trump, $2 trillion from Biden, you had the perfect yield curve. So they overstimulated with the 3 trillion pump. Okay, this is what they want, and this is what they don't want. So will rate hikes start to bring down short-term inflation expectations and improve long-term growth expectations and get us back to something like this? Maybe the rate hikes will do well. Now the data is in aggressive rate hike cycles. Typically, right when the rates start going up, you get a bit of a pullback, but you look out 12 months out and you have very nice returns on stocks. Okay, and I believe the market already priced in the early rate hikes. That was the crash, and then we're on the verge of a very nice stock market rally led by growth or cryptocurrencies, probably for the remainder of the year as soon as energy costs come down. Here's the VIX futures term structure. So it's set up to lose money or make money very quickly, being in backwardation where the front end is above the long end. Okay, so if stocks go down anymore, this puppy screams higher. If stocks trade flat or up, the VIX is going to get crushed. Okay, so I want to get us out. It's too early to get out. We look at what's happening. There's no reason to think this conflict is anywhere near over. Perhaps it's just getting started. So it makes sense to just be a little bit patient here and see how this plays out. The only cryptocurrency I like more than Ethereum is Polygon, which we have exposure to in our private equity, which is only available to paid members. Another reason, if you're on a trial, you should upgrade and ask about it. That's the only way you qualify and can even be allowed into it. And so Polygon is the really, it's like the Lightning Network for Ethereum. Lightning Network makes Bitcoin much more efficient. Polygon makes Ethereum much more efficient. And so we're betting big on that. Okay, here's the core data that has to slow down. So let's talk about what we're expecting. And the core inflation rate jumped 0.5 month over month. I want it to jump by no more than 0.5 for February. Now with this Russian thing, energy costs, food costs are not coming down. So it's questionable. We have wage pressures, we have rent pressures coming in. Okay, we've got used cars falling. That's about the only one that's really falling right now, but it was a huge part of the CPI, which is absurd because who's buying a used car every year? So that's the main thing. Now by March, the year over year, 2-year anniversary of the lockdown, everything's going to be in our favor for CPI to start falling. So February could be another ugly print, especially if this conflict with Russia doesn't come to an end really freaking soon. So that's what I'm expecting. Slow down to a peak in March, fall in April. That happens, bond market's gonna be very, very happy. And thus cryptocurrency is gonna be extremely happy. Producer price index seems to be topping out. Now we're seeing ridiculous prints in Germany, Spain, all of Europe. The US seems to be slowing down. China seems to be slowing down. Okay, so that's printing how I'd like to see it. If this keeps going up higher, we have to definitely second guess ourselves about this inflation expectation. Okay, meanwhile, we just hit a new record high in the money printing at the US and in Europe. And with this conflict, Europe's probably not going to slow down its QE anytime soon. Okay, very good. So we're about to go into the exact asset allocation for both strategies. And unfortunately, if you're not a paid member, you don't get to see this, where your video cuts off. Call Dean right now to upgrade 505-322-7515. Gain access to our membership area so you can customize your trade alert, get 70% of your money in our safe growth strategy, 30% in our high risk strategy. Okay, very good. So we're going to go ahead and jump to that.